That's what we just said. If you don't know what a price floor is an inverted tariff. A price floor is, I'm going to buy all I can up to 100. And I'm going to take my time over 3 years. And then after I get all I need up to 100, I'm going to tell the world I'm tariffing the shit out of it up to 105 and then watch them panic. That's why China's panicking. They know what's coming. They're not dumb. Buy more. So we've been buying. So here it goes. Silver. Oh shit, we better start buying it. Buy it, buy it, buy it, buy it, buy it. Everyone starts buying it. China goes, oh shit. They start buying it, buying, buying it. And then we say no tariffs. Everything backs off. But it backs off at a higher level. Can silver crap out to $50? Sure. Would I buy it? Of course I buy it. You got to be out of your mind.
Between mid-January announcements and market reactions, something bigger has been quietly unfolding. Governments aren't just talking about tariffs. They're quietly preparing for supply shocks in critical minerals like silver, lithium, and uranium. This isn't speculation. It's strategic stockpiling, and it's setting up a major reset in global metals markets.
The critical minerals, which include silver and copper and lithium and everything else, those are all metals that, for the most part, we have on land. Now, we may not have silver here. We have to import it, that's for sure. I'm not going to argue that. But I'm going to make the point that we can import it. It's from Latin America, and we're pulling it in. So it's a critical mineral. The proclamation, which is about all minerals and all metals, focused on the ones that we cannot get. So we have to import 75%, let's say, of silver, but it comes from friendly nations. We have to import 100% of lithium, but it comes from unfriendly nations. So my understanding, my digestion of what happened yesterday, the 14th, 15th, and 16th, is as follows, to give you some semblance of rationality so you can look going forward. I warned people about the Ides of January. This is the Ides of January. So here's what happened. Between January 14th and January 17th, it was expected at the institutional level that the government would make an announcement regarding Rule 232 and tariffs. And they did on the 14th. That is the proclamation. The proclamation says no tariffs on anything yet, 180-day window of negotiation. And after those 180 days are up, we're going to make a decision on tariffs. Now, between the beginning of the 180 days and the end of the 180 days, what you have is you have a nation that's going to accumulate, that's going to buy, that's going to get what it needs to get, when it can get it, how it can get it. At the same time, China, who is aware of this, right? They're going, oh shit, they may tariff this, they may not, but whatever's going on, they're buying it. So they're buying it too. So you have a custodial race for metals. And the ranking is, you know, we need to buy lithium, we need to buy uranium, we want to buy silver, right? We have copper. That's the ranking. Lithium, uranium, silver, copper. You're just using those four metals. There's obviously plenty of other assets that we're looking at here. Okay, so I'm giving you the geopolitical chess, at least the way I see it, how it's going. So the United States says all critical minerals are critical. Boom. Okay, but the ones that we import from countries that we're not friendly with, like China, right, we have to make a decision on. So right now, well, not right now, running into that announcement between, say, January 1st, or let's say actually since October, since the first 232 comment to now, the market has been sorting out what the government will do. Well, we know what the government will do because they're doing it. We told you. We and Josh Fair told you that the U.S. is buying concentrate from Latin America, hand over fist, coming into the U.S., hoarded for U.S. use. That's their response for silver. We're going to hoard metal. That's why silver ran up as precipitously as it did. And that's why silver is going to come off. I'm not predicting it today. Don't hate me. I don't care. Hate me. Okay. Silver is going to come off. But if you listen to the first thing I said, this is a new reality. Now, back to the script here. So how did we respond to the expectation of silver either A, not being tariffed, but we want to get China out of Latin America? Boom, that's what we're doing. Or B, being tariffed, we want to make sure we have enough in-house before we tariff it. And so there you have it. Do you know what, to give you an idea, do you know what we would do to the rest of the world if we said silver's tariffed? Now, are we going to do it? The odds are extremely small, folks. extremely small. But it could be. If we tariff silver after basically sucking dry Latin America of all the concentrate, JP Morgan going into every miner saying, we want it, we want it, we want it, we want it. 5 years, 5 years, 5 years, 5 years. That's it. No more concentrate leaves Latin America. That's all our silver. And once we secure that concentrate and the smelter's built over the next 5 years, what happens? We say tariff silver. And the price that we tariff it to, we actually buy it at. Small amounts, but enough for the rest of the world to comply with our price. And the price of silver permanently stays up. That's how tariffs work. You see, price floor is what you buy and don't tell anyone at. And when you've bid it up to the price floor, then you call that the tariff. That's what they're doing in silver. Silver, call it 1980. We want to leave that spike in there. 1980 to 2024. Now, the chart formations are very similar, not in magnitude, not in length, but they're very similar. It's a couple spikes here and there that we never get back above again. And then what you really have is a long trading range that is a sleepy commodity. So you could argue, for using silver as an example, that the same thing happened in silver in 2004, 2006. I would argue that that's not the case because this broke down a lot lower. What's the same about silver, gold now versus copper, oil then?
Here's what's happening behind the scenes. When nations anticipate future restrictions, they don't wait, they accumulate. And when multiple major powers act at the same time, prices move sharply, pause, and then reset at a higher baseline. Vince Lanci calls this a custodial race for metals, where supply security drives institutional buying. Silver is at the center of this story, not because it's rare, but because it's critical and largely imported from Latin America. The U.S. response? Hoard physical supply. This explains the sharp run-up in silver prices in January. It wasn't retail speculation, it was government and institutional accumulation. The pullbacks we see now don't invalidate the move. They confirm a new reality where governments quietly absorb supply to control future pricing power. Here's the strategic twist. Tariffs don't start with an announcement. They start with buying. Once enough silver is secured and refining capacity is built domestically, a tariff effectively becomes a price floor. Even if it's never officially imposed, the act of setting a hidden floor through accumulation permanently lifts the value of silver. This isn't just theory. Charts show that each reset after aggressive accumulation happens at a higher level, creating a new baseline for the market. We've seen similar patterns in industrial metals, like copper, in the early 2000s. Now, monetary metals like silver are going through the same transformation. Silver sits between two worlds. It behaves like copper because it's industrial and like gold because it's monetary. For decades, this dual role held it back. Now, it's working in its favor. Both the US and China appear aligned in managing this transition carefully, letting prices rise, keeping markets orderly, and avoiding a 2008-style collapse. What looks like pullbacks in silver, copper, and gold. Those are simply pauses after aggressive accumulation, not signs of weakness. Each reset establishes a new floor, setting the stage for a higher price reality moving forward.
So, bringing it back to the chart, that's why silver's down. That's why copper's down. Because the event, the presidential proclamation, said no tariffs. No tariffs is bearish for copper, for silver, for gold, for everything. Not because there's peace, not because there's happiness. It's just kicking the problem down the road while we buy more. So we've been buying. So here it goes. Silver. Oh shit, we better start buying it. Buy it, buy it, buy it, buy it, buy it. Everyone starts buying it. China goes, oh shit. They start buying it, buying, buying it. And then we say no tariffs. Everything backs off. But it backs off at a higher level. Can silver crap out to $50? Sure. Would I buy it? Of course I can buy it. You got to be out of your mind. Okay. Anyway, as I said, I'm looking for miners now. That's what's going on. That's the correct, in my opinion, that's the correct take on what's going on in markets right now. Look at the markets. The metals that were up are down. I don't have lithium available. Uranium is an example. Uranium is probably up and then up more because shit, They bought it and now they're going to buy even more of it. We have to secure supplies. Hi, Canada. I know you have a lot of uranium. That's probably what this is going to be about at some point. Okay. Enough with that's why the markets have done what they've done. This is a story that I based that on Metals Exec, Silver Physical Market under Strategic Pressure, right? That's Josh Fair. And essentially, Josh Fair did a video. We had discussions and we did a collaboration on a post. News and analysis found the special price floors are coming. That's what we just said. If you don't know what a price floor is an inverted tariff. A price floor is, I'm going to buy all I can up to 100. And I'm going to take my time over 3 years. And then after I get all I need up to 100, I'm going to tell the world I'm tariffing the shit out of it up to 105. And then watch them panic. That's why China's panicking. They know what's coming. They're not dumb. Coming soon over the weekend, HSBC's gold outlook for 2026, silver's cresting wave. That's also their outlook for 2026. ING, believe it or not, calls their report the metals new era. It's almost like they're listening to Michael Oliver, silver's new reality. Me, when I'll say the silver reset, the silver recalibration, other people. By the way, it's also dangerous when a bank like ING says that. The future of work, what AI will do to transform work, in a very thorough explanation by a firm that will remain anonymous. Morgan Stanley, coincidentally, they see buying of uranium returning. And it's kind of inelastic demand, which makes sense given all the news that's coming out. Speakers today, we don't care. So now I'm going to pull up a chart, 4 charts to be exact. The first chart I'm going to pull up, this is to the presentation I did. This is relevant to it. This is copper between 1990 and 2007. Sometime between 1990 and 2004, copper was a sleepy metal. You buy it at 50 cents if you can get it, and you sell it at $1.50. I remember that. I mean, I didn't trade copper that much, but it was a pretty cool market, even though it was like that. And then something happened in 2004. I don't know exactly when, but the market changed. And as Michael Oliver pointed out to me, which made me click on my stories and his charts, it broke out. And it broke out into a new reality. Now, it's continuing to go up. I'm not going to argue with that. But it broke out of a new reality, and then when it retraced to a higher level. That's 2004, 2006 is when this whole era started. 2006 is when you probably get your perfect technical breakaway. But 2004, 2006 is when things changed. And when those things changed, it had to do with China. And I'm telling you that what happened in industrial metals is now happening in monetary metals. And it's not looking back. So why is silver up so much? Because part of it is like copper and part of it is like gold. Because silver's more than money. Silver benefits from both of these things now. Because for 50 years, it suffered from both of these things. So I would put to you that the world is now making room for China in a monetary way, the way it made room for China in an industrial way in 2006. I would put to you that China and the US are on the same page in doing this in an attempt to keep the market stable while letting gold and silver and other commodities go up again, because they do not want to crash the world market like they did in 2008. Again, this is a controlled inflation.
So, what does this mean for investors? Short-term volatility is expected, but the long-term trend points to a new regime for silver and other critical metals. This is controlled inflation, a strategic recalibration in motion. Stay informed, stay patient, and understand that these market shifts are structural, not temporary. Make sure to like, subscribe, and share to keep up with the latest insights on metals and the financial system.